after a long time we are seeing investors, both global and domestic, looking at these reactions to invest aggressively, which was unlike the past 18 months where investors were looking at upticks to sell. Now it's changed to buy on reaction. So even if there is a reaction, our call would be that those reactions are going to be short and swift. Our attempt is to try and see how we can rejig and move from sort of just exuberance kind of stocks without fundamentals or moved up to companies which have fundamentals and which still to participate in the rally. Power sector in India has got huge potential. You have a severe power shortage. The demand is unsatiable. So from a developer's perspective, I think it's a very good business to be in, where you can put in huge sums of money and then you have a huge demand. The much needed boost which the power sector needed in India is coming through. And we should not forget that power sector is one sector without which the dreams of India to sustainably grow at upwards of 8% will never be met. We are big overweight in some of the media companies on the cable side. We feel that there is some optimism which is there on the insurance and the retail side. So I think that wherever there are government initiatives which are likely, including power, you will see some interest and opportunities coming in.
Interest rate is going to come down. When the interest rate is going to come down, a lot of NPA would see recovery. So we believe banking sector would be interesting space to be in. It is also a direct play of India's GDP. The second space we are turning bullish is the capital goods, because we believe this sector will see some activities because the government will come out of the reform post-budget and post-UP election. And the market would see the visibility of these things at least 6 to 12 months now. In capital goods, we like a company like BHEL, we like a company like L&T, Crompton Greaves, Thermax. These are the idea we like. So we believe that capital goods, banking would be the interesting space, and added to that is industrial. I think we are overweight on these three sectors. We are underweight on real estate, we are underweight on IT. My sense is that over next 12 months, the market may touch new high, and I'll put 70% chance on that.
Indian valuations are beginning to come under a bit of pressure, I think, in that they're no longer as screamingly cheap as they were 2 months ago. We came into 2012 with a neutral recommendation on India, but we were emphasizing neutral as opposed to underweight, because we thought that Indian stocks had gotten cheap enough that investors should no longer be underweight in that market. But from here, we find that Indian valuations at roughly 14 times forward earnings are effectively in line with long-term averages, and so that value proposition is not there. What we're going to need, I think, to open up more headroom for Indian stocks on a medium-term basis is to start seeing some earnings upgrades. And I think what we're going to need for that is for monetary policy to start to loosen.